Alright guys, today I'm going to be showing you how I caught 15RR on NZDCAD with just 3 entries.
Drop it.
Alright guys, this is E4cfx and I'm leaving the right place at the right time. Welcome to my YouTube channel. Make sure you do well to subscribe, like and also share. Okay, this is NZDCAD. Now let me show you how we do this. Guys, come on, look at this entry right here.
This is what we call market order flow. So guys, let me help you down to how we caught this entry.
Alright guys, I just did a wonderful Zoom call with my students, and this is a free signal out there. It gets the pair. Alright, so right here I'll be expecting price to take out this liquidity. So look at when I said okay, NZD triggered, right?
But before that, I want to show you guys, first of all, marking out your supply and demand zones. You can see how I dropped out my supply zone here and here my demand zone. Now to catch another flow, there should be what? This is a bearish order flow, right? And there should be a continuous breakoff structure to the downside. So knowing where to identify where liquidity is and where the breakup market structure really lies, that is one thing that is important. And also your mitigation point, MP, that is what I do. So you can see I have this one, first order flow 1, second order flow 2, I have this third order flow, and all these are actually breaking structure to the downside. You can see break of structure here, price reversing to mitigate an order block and drop break structure. Right after this price broke the structure, you can see price creating this liquidity, though price broke the structure. But you remember, in a higher time frame and a lower time frame, we can have this as a lower time frame structure, but the whole of this information is still, bouncing up on one thing, which is what? Price breaking structure to the downside. So a higher time frame might be like this, but you will discover that in this higher time frame, the lower time frame will have something of this nature. You understand? But it's still doing the same thing, guys. You can see still doing the same thing. So this is a higher lower time frame, and this is the higher time frame mark. But what I want to show you is where to identify the real break of market structure. Right here you can see price broke structure here, and after price did what it did here, creating this liquidity, you can see price mitigating the order block and then broke structure, leaving this place also a what? An order block. That's why here is not an order block, right? This place is not an order block, but what? A liquidity. So I'm going to clear this off, and here price also left up after price broke structure here, left us with this mitigation point. So identifying your mitigation point in terms of the market order flow. And now when price change bars, leaving us with a change of character here, you can see break of market structure, where price without liquidity, demand zone, and then a continuous order flow. So come on, let me show you how I pick this entry on NZDCAD. Okay, first of all, before I show you guys, I would like you to subscribe to my YouTube channel. What's up guys, this is E4cfxglobal Academy, and right here you learn, we guide, and you become profitable. So here is my website, and this is the payment method. You want to join my community now. This is the payment method. Just come here, then put the promotion code. I think the promotion code right now is E4cfx sales. So put this promotion code you're seeing below, and then you have discount. You can use your card payment right now in case you can pay through crypto and all of that. This is for you guys, so you can join the community. Back to the chart. Now we're in the market structure. The diagram I showed you initially, first of all, what did I say we're going to do? I said we're going to identify our demand and supply zone. So that's what I'm going to be doing. Now I've cleared this chart, and we're going to be doing a replay on this. First of all, I marked out my what? my supply zones. Firstly, price swept out this liquidity. Immediately price swept out, I marked out this nice base candle before the impulsive move. And here also I had to mark out my demand zone. You can see this demand level and where price need to actually sweep liquidity. So here is my waiting PMS. Now I also have this guy also, because here is also going to be the liquidity which I should be looking at price what takes out also. So we have the liquidity close to our price, and not forget that this area here is actually, you can see that impulsive move. Now note there was an impulsive move that took the structure. That's why I had to mark this zone, because there's a psychology level that broke this zone and then left us with this as our mitigated point. Now price has mitigated that, right? So we're going to be careful picking our entry right that zone. So here is a mitigated point, mitigated OB. So yeah, I marked out that guy, and now I have to move to the what lower time frame. Let me go to 1 hour. Now I'm on the 1 hour chart, right? Yes, you can see that that's candle formation I picked. Now I'm in the 1 hour chart, so I will be looking for how to pick an entry here. Price only mitigated this zone. See what we need to achieve. Okay, you can see, guys, look at this right here. Price left us with this guy. You can see this guy, right? So this is actually an engulfing candle. So I am wanting to work with this engulfing candle. So here is my entry and my stop loss above that high. So here my TP is going to be at that awaiting structure. This is how I call this 1:5 RR here. So this is how it looks like, guys. You can see. So this was the first entry that I sent to the group. Let's play this also as we keep doing that. Now price went to mitigate us. You can see how price mitigated me, and now that price has mitigated me, I will be expecting that price break out this low, because this is actually right here is the low that took away this guy before we get mitigated on our what OB. So I want to see price take out that guy, come back to a journey right here that's called pullback, and then price keep going down to this direction. This is how we get order flow, right? So let me delete and then play this guy. I want to first of all see price take out this liquidity. So can you see what price has done? Price has actually swept this guy off. So price has taken out this liquidity. The next thing there is to find what? An entry. And you can't find an entry in the higher time frame, because higher time frame only shows you the directional bias of the market. It doesn't help you find an entry. Rather, it reduces your what? Risk to reward ratio. So let's see. I actually caught this entry again right from this area. Since price didn't sweep this guy, I will be working with this area. Yes. So I will move down to 10 minutes time frame. Nice shooting star candle formation. This is the inverse of a hammer candle. So I'll be working with this guy. Remember, because price has already swept this guy away, so now that is the guy I'm going to be working with. This other block right here. This is a 10 minutes POI. I showed you guys 10 minutes. What is POI? POI is called point of interest, where you are looking at your order block to be. So right here, price already sweep this guy away, and hence this place now will be termed as what? Break of market structure to downside. And now the next thing here is to what? Put in my limits. I'm gonna be shorting this guy also, and then my stop loss should be above here, and then my target right. The same thing right here goes right here. So this is what I should be looking at. So now that we have this another 5RR, this is how I caught this one also. So let me keep playing this price and then watch this guy. So you see how we are sniped in. You can see how we are sniped in on this trade. All right, guys. So here becomes the next liquidity that needs to be taken, because this is the low that price created. Now let me show you guys. Now this is how the price movement looks like. Price got down to this point, you know, after price broke the structure, came to mitigate an order block right this area. Now price will sweep this guy right to continue the push to the downside. Now I want to show you guys something. How I cut this area is very simple. Here is my liquidity, next liquidity target. So at this level also, I have to, note this, because I have this area where price, rejected from this zone, dropped down to this point, then trace and mitigated this area, and now price broke this guy. So hence that price broke that guy. I should be expecting that price will what? Retrace. So here becomes now a partial demand zone at which I'll be looking at to shut down to take out that liquidity. Here is the 30 minutes time frame, and you can clearly see this guy, right? Based on what I was explaining, that price has to what? Take out this primary break of market structure. You can see it right there, and hence right here I'll be marking this guy at this 30 minutes POI. This is the candlestick I want to be working with this time around. So now I'm going to be working with this guy. Let's see how it's going to look like. So this is how to actually identify those key levels. So here is my entry point, and let me mark up my exit point. Let's see how it looks like. So this was the last signal I sent to the group, and let's see how it displayed. You can see how I send the signals back to back to the team, and look at those entries right there. Beautiful entries, beautiful entries. All right. You can see price already came there, mitigated that zones, right? You can see tapped in like twice and then start dropping down. Now price has also what? Swept this liquidity, and now you see price dropping downwards. This is a very good entry and an exit point. So do well also to join if you are inspired. Take care, everyone.